Here's what's coming up on the program today. East African central banks more adopting digital currency to ease payments. In South Africa's Eskom raises wage hike offer to 4.5% from 3.75%. And Zimbabwe carbon credits programs get 2 months to meet new rules. Hello and welcome to Business Incorporated. I'm Will Ibong. Let's get right to it. We begin as always with market numbers from Africa, where major equities were trading mostly negative at intraday. We see, except for the Nigerian NGX, which was up 0.16%, South Africa's GSE was down by a massive 1%. Now in Egypt, we see the EGX 30 dropping by 0.09% at intraday, while Kenya closed Monday's session in negative territory, is still below the 100 level that we're used to. Now let's check in with what's happening at the exchange. We have Samson Owolabi, investment research analyst, ARM Securities Limited, to share what's going on the floor of the exchange. Good afternoon, Owolabi. It's good to have you on the program. Can you hear me, Samson?
I can hear you.
Okay, great, Samson. We're seeing a lot of positive movement on the NGX right now. We want to know what's driving this. The MPC started today, and decisions going to be taken tomorrow. What sentiments are investors trading with today?
Okay, so thank you for that. Actually, concerning that now, we have been seeing that they have seen positive movements in the market, and this can be attributed to some buying interest that we can see on some stocks. And we can see that these stocks have been seeing some buying interest. Stocks like when we look at stocks like Transcorp, they have been like the major takers that have been driving positive sentiments in the equities market. And you mentioned something about like maybe the MPC, maybe something is really like there's an impact at that particular space we have on the equities market. Well, for that, what I'm just going to say is that over time we have been seeing that the interest rate hikes, especially the ones we've been seeing this year, we have not really been seeing that particular impact on the equities market concerning that, or even the fixed income market, because the monetary policy rate has somehow lost its signaling effect in that area. So we can see that more CRR debits and also bond maturities are like the major factors that have really been driving the market when we talk about the fixed income market. However, when you look at the equities market, it's just on buying interest in stocks like Transcorp, Triple G, and Unilever, and UPO, and Charms. Those are like the major stocks that have been driving the buying interest in the equities market for today.
Okay, so what about the oil and gas index? It closed low at 0.64% in yesterday's trading session. What's happening with that index?
Well, concerning the oil and gas index, what we just see is that one thing that you can just attribute that to, we can just see that it's based on negative sentiments and also buying and selling, the forces of demand and supply in that particular market. We are just seeing some investors take profit in that particular sector. We've seen a lot of buying interest in the oil and gas sector for during the month. So this is just like some investors trying to like take profit in that particular sector. However, the oil and gas sector have been doing like positively well over time for some time now.
You talk about this performance being stable for some time now, but we're hearing talks from some analysts that the debt ceiling negotiations in the U.S. is a major determinant for the oil prices and the movement in oil prices. How do you think, in your opinion, what are your thoughts about that? Do you think it's going to impact our index here in Nigeria and global oil markets as a general?
Okay, so concerning the US debt ceiling, one thing that we have to like make mention is that the thing that is really like driving volatility and sentiments in that particular space can be attributed to the fact that there's this kind of a fear in the market that if the debt ceiling is not like, let's say, raised very soon, the US might default on its loan. So that particular volatility is really trickling down into the market, and we are seeing a lot of players in the market trying to like, let's say, find a way to just like be safe and also to like take caution in such a situation that something like that happens. However, when we look at what we have been expecting from, let's say, from the President Joe Biden, as also from the head of the Treasury, they are all about to like reach an agreement concerning that. So that is one thing that we are just saying that let's say it's going to like reduce that particular sentiment. However, it's not something that I think that is supposed to like drive the market right now. It's not something that I think that investors are supposed to like be scared about, or let's say should be like a major concern for investors right now, because once they raise the debt ceiling, you will see the factors, you'll see the market coming back in place. So concerning that, I do not really think that that will be like a particular issue for the oil and gas sector. When we look at the fundamentals of the oil and gas sector, it's still looking like very, very like impressive, and it's still like a play that I personally believe that it's still a sector that investors can still fall back into in these volatile times.
So let's go circle back. Let's talk about the MPC, the central bank's MPC meeting. What do you think the MPC is going to decision they're going to take tomorrow?
Okay, concerning the central bank and the decision, we have seen the kind of, let's say, the kind of trend of activities in that particular sector and in that particular space. For one, the CBN has been known that since inflation is still like recording an uptrend, we're still going to see them hike interest rates just to like, let's say, mitigate and to like, let's say, curb inflationary pressures. So I'm still expecting like a 50 basis point hike in interest rates for at the end of their meeting tomorrow. That is what I'm expecting there. We do not see the CBN cutting rates anytime soon. We do not see them taking a dovish position anytime soon right now. So, and they might not also take a stand and watch approach anytime soon right now. So we are still expecting the 50 basis point hike in interest rates.
So how do you think the market is going to close today? Are we going to sustain the bullish sentiment, or are we going to see a flip? Anything could happen anytime, right?
Well, look at the market, it's driving. Anything can happen actually, but I'm seeing like a positive close right now. There has been this increased and positive sentiment in the market. So we can see this close on a positive note if there are no any big news coming around. So we are still expecting a positive close.
Thank you so much, Samson Owolabi, investment research analyst with ARM Securities Limited, for sharing those insights. And look out for that positive close at the close of the bell.
Yeah, thank you very much again. Thank you for having me once again. Have a nice day.
Now let's check out the price action in the Middle East, where stocks were trading negative at intraday. We've seen Abu Dhabi down 0.16%, with Dubai index also down more than 0.5%. Elsewhere, still in Saudi Arabia, we have 0.1% down for that index, while the Qatari index was down 0.27%. Now, the European Trade Union Confederation is meeting in Berlin. Nearly 600 delegates from 36 countries will be discussing the most pressing demands and priorities for European workers. Deutsche Welle's Chipunda Chimbelu joins us from Berlin with more. Chip, what are the main issues for trade unions now?
Well, the current economic climate is the leading problem for trade unions. Inflation and a lack of skilled workers in European countries is a major challenge. Workers are increasingly facing much higher costs. Now, take the Eurozone, for instance. Inflation here has ranged between 7 and 10% in the last 12 months. Food inflation reached an all-time high of 17.5% in March. But wages aren't keeping up, so people's budgets are squeezed. And that's at a time when there's a shortage of workers, meaning that many people are having to deal with more work and fewer people on their teams. And then, of course, there's also the new economy. Technology has shifted how we work. More workers are entering the gig economy. And that's also another challenge, even more complicated by the question of artificial intelligence. Trade unions will be discussing how AI can be used in a way that doesn't significantly disrupt the job market.
We do see companies saying they're going to replace a lot of workers with AI, but how are the unions trying to fight for better working conditions?
Well, strikes are one way, for instance. That's one thing that hasn't escaped notice here in Europe. Massive strikes by transportation workers have disrupted life in the UK, France, Germany in the past 12 months. In Britain, strikes by healthcare workers led to the rescheduling of more than 500,000 patient appointments. But of course, trade unions are not just about organizing strikes. A lot of their work is actually behind the scenes. They are on the lookout for workers' rights, looking at issues like the gig economy or AI, which I mentioned already. And of course, sometimes they engage in collective bargaining for an entire industry, helping set standards in pay and working conditions. And that's why we have powerful policymakers attending the European Trade Union Confederation here in Germany, in Berlin. We have German Chancellor Olaf Scholz and the European Commission President Ursula von der Leyen lined up to speak at that event.
So how are markets, what should we be watching out for today in the European markets?
Well, markets will be watching a keynote address by European Central Bank Vice President Luis de Guindos. They'll be watching for signs pointing to how much the ECB is willing to raise borrowing costs. Inflation in the Eurozone was at 7% in April. That, of course, is much higher than the 2% target rate. In terms of data, the markets will be looking out for the purchasing managers' indexes from the Eurozone, from France, and of course from Germany as well.
Thanks so much, Chip, for that update. Now we'll move over to Asia, where markets mostly slid on Tuesday as talks between U.S. President Joe Biden and House Speaker Kevin McCarthy ended without a deal. In Japan, the Nikkei 225 closed 0.42% down at 37,957 points, snapping a 7-day winning streak. Now in Australia, we see the S&P ASX 200 falling 0.05% to end, while South Korea's Kospi climbed 0.41%. That's the only gainer in the region today. Now we see Hong Kong's Hang Seng Index reversing earlier gains to sink 1.25% down. That's the lowest levels it has since March the 21st, while mainland Chinese markets also traded lower. The Shanghai Composite closed down 1.52% at 3,246 points. Now, stock futures in the U.S. are lower in early trade today after a key debt ceiling meeting between President Joe Biden and House Speaker Kevin McCarthy, even though the two did not strike a deal. Futures tied to the Dow Jones Industrial Average fell 0.15%. S&P 500 were down 0.1%, while NASDAQ 100 futures inched lower 0.05%. Investors have been closely eyeing debt limit negotiations in Washington, hoping for more certainty as the so-called ex-date of June the 1st draws closer. Investors will watch today, just Tuesday, for a batch of corporate quarterly earnings as well from retail stocks. Now, oil prices slipped early on Tuesday as investors concerned over the risk of a U.S. debt default dampened risk appetite, although a tighter market due to a seasonal rise in gasoline demand and supply cuts from OPEC Plus producers lent some support. Brent crude fell 26 cents to $75.73 a barrel, while U.S. West Texas Intermediate, that's WTI crude, slipped by 24 cents to $71.81 a barrel. Both had risen earlier in the session. Now, experts say the tug of war continues at the U.S. negotiating tables with no breakthrough yet. They add that macro sentiment will remain the dominant price driver in the foreseeable future. We scoot over to the metals market, where gold prices fell on Tuesday, weighed down by a stronger dollar and hawkish remarks by some Federal Reserve members, while investors kept their eye peeled on the U.S. debt ceiling saga. Spot gold shed 0.4% to $1,962. Gold futures were down 0.6%. CME Fed Watch tool shows markets are now pricing in an 84.7% chance of the Fed standing pat on rates next month. Survey also shows economists have pushed back their expectations of when the U.S. Fed will cut interest rates and have raised their forecasts for inflation and the strength of the job market. Meanwhile, spot silver fell 0.5% to $23.55 per ounce. Palladium lost 0.4% to $1,485.59, and platinum was flat at $1,066.59. Up next, more updates from the commodities market space. Stay tuned. This is Business Incorporated. Welcome back. Nigeria is estimated to have 42.47 billion metric tons of bitumen reserves. However, according to the trade report released by the Nigerian Bureau of Statistics, Nigeria's bitumen imports stood at a whopping $62.25 million in the fourth quarter of 2022. With the commencement of operation of the 650,000 barrels per day capacity Dangote refinery, we're going to be seeing how that works out. Victoria Momo, analyst financial derivatives company, joins me to unpack that. Good afternoon, Victoria. It's good to have you on the program. Now, Victoria, what impact should the operations of Dangote refinery have on bitumen production?
Good afternoon. Thank you for having me. So I would start by saying that it is true that Nigeria has vast reserves of bitumen here in the country, but we've not been able to fully explore those resources, particularly for economic uses. And that has created the need for importation. Just like you rightly said, the whooping $62 million in Q4 2022. This is a dent to the country's foreign exchange. But now that we have the commencement of Dangote refinery, it's expected that we'll see more bitumen production. And this is because all refining actually comes with increased bitumen production, because bitumen production is a byproduct of crude oil. It's at the bottom layer of the fractional distillation process of crude oil. So oil refining, like I said, would actually come with increased bitumen production. So the commencement of Dangote refinery would actually increase bitumen production here in the country. And we could see more investors, going or taking advantage of that opportunity, exploring the opportunity of increased petrochemicals in general. And this would ease the pressure on the country's currency, which is Naira, because the need to import would actually reduce. Then bitumen is actually a very, very important material used in paving roads. So we could see a reduction in cost of road construction here in Nigeria due to the increased bitumen production here in the country. And then again, we could see increased revenue generation here in Nigeria due to the fact that the bitumen production will not just be used to satisfy domestic needs, but also exports to generate revenue. And this is good for the federal government, especially at a time where we are looking for revenue. Countries like Saudi Arabia has actually been able to take advantage of their petrochemicals and make a whooping $20 billion in some years. So, I mean, it's a good investment. But that doesn't cancel out the fact that we still have that resources and more needs to be done to exploit in order to meet the demand, the domestic demand for bitumen here in Nigeria, considering the fact that we have huge road infrastructure deficit, which has created the need for bitumen.
No, we do have this deficit. We do have this infrastructure gap. And you mentioned earlier about the importance of bitumen as an important material for road construction. But we're seeing now that it's being substituted by construction companies and contractors for concrete interlocking blocks. Concrete roads are now infinitely more expensive than bitumen surface roads. But what impact will this have on the demand for bitumen?
Well, I would like to start by saying that the increased attractiveness to concrete paved road is actually due to the fact that concrete is more durable compared to bitumen paved road. It lasts longer and it doesn't need frequent maintenance. So that doesn't increase the cost involved in maintaining the road. So as a result of that, people or constructors are actually, tilting towards concrete paved roads. In addition to that, we have cement readily available here in Nigeria, and as opposed to bitumen, which we need to import to meet our demand. And then you know that bitumen prices is actually subject to volatility, just like crude oil prices. And then there is scarce foreign exchange to import bitumen into the country. So those are actually constraints. And then there is also the aspect of environmental consciousness, because the process involved in melting bitumen on the road, or paving the road with bitumen, actually releases some sort of polluting agents to the environment, and that is not very good for the green environment that we are all looking at achieving. So this, of course, would affect the demand for bitumen. But this doesn't even change the fact that bitumen as a form of material used for reconstruction is relatively cheaper compared to concrete.
So using your crystal ball, Victoria, what is the outlook for bitumen prices? You talked about the importance and other factors. What do you think the prices will look like in the short to medium term?
Well, of course, I would like you to know that bitumen prices actually moves in tandem with crude oil prices, right? And that is because, like I said earlier, bitumen is a byproduct of crude oil. So whatever factors that influence crude oil prices would also affect the price of bitumen. But it may interest you to note that China is actually the major consumer of bitumen. And as we're all aware, there is economic recovery in the country. And this, of course, is going to drive the demand for bitumen for construction purposes, and this would increase the price of bitumen. In addition to that, we are slowly getting closer to the summer period and the hot days, which is characterized by increased road constructions and the like. So we could see more demand for bitumen, and of course, when there is increased demand for a commodity, it drives the prices up. So we could see increase in price of bitumen.
Thanks so much, Victoria Momo, for those insights. Victoria Momo is analyst with Financial Derivatives Company. Thanks for making your time to come on the program. Now, East African central banks are considering adopting a digital currency to fast-track cross-border payments and reduce costs. The region has been pushing for integration to boost intra-regional trade and investments, which are running into headwinds from tariff and non-tariff barriers. The latest study by the African Banker magazine shows that Tanzania, Uganda, Kenya, and Rwanda are part of a growing list of African central banks focused on implementing a central bank digital currency, CBDC. Nigeria became the first country in Africa to launch a CBDC on October the 25th, 2021, and the second to run a CBDC that is fully open to the public after the Bahamas. Now in South Africa, Eskom has raised its wage offer to three unions to 4.5% from 3.75% as the third round of talks resumed today, Tuesday, with unions' demands ranging from just over 10% to 15%. The talks look headed for a stalemate and arbitration. Eskom had the union seeing red at the last round of talks when it did not budge on its initial offer of a 3.75% wage increase. The talks comes as winter sets in amid rotating power cuts that are slashing economic growth and fueling inflation. Now we'll cross over to Zimbabwe, where the country will now give producers of carbon credits 2 months to comply with new rules, including handing the state half of their revenue. This comes a week after it cancelled its offsets program, which roiled the global carbon credits industry. The rules include a mandatory level of at least 20% of revenue for local investors and a maximum of 30% for foreign investors. According to Zimbabwe's environment minister, the rules are meant to enhance benefits for the state and the communities that host the projects. And that's a wrap on Business Incorporated. Do join us tomorrow for a special edition of our MPC. The central bank is going to make its decision. Stay tuned. We're going to be giving you live updates. I'm Will Ibang. It's bye for now.